Good morning, traders. Papa Wall Street back with another daily watch list. All right, keep in mind tomorrow the market is closed, but let's see what we have under the surface here. So first up is going to be a new trade idea for today. This is going to be GE Aerospace. Remember, they've spun off the company into different parts. So this is GE, the aerospace company. And you could see resistance against 163.41 three times, came close to this one, and then yesterday. So for me, very simple. This is a bull flag setup. We had above average volume yesterday. This is a TTM squeeze setup. We have MACD curling for a crossover. Yeah, I mean, this is looking pretty good for a trigger over 163.41 to a move up to 170. Now, I've had some questions about, hey, but when do I take the trigger? What time frame? So for me, I look at this a couple of different ways. First and foremost, we want to have a daily close over our trigger. But let's say, first thing in the morning, 30 minutes after the market opens, GE starts to move higher, right? And we're moving higher and we're moving higher, and then we stop here, and that's where we close. Do I want to buy it here right at the end of the day? Probably not, right? What I want to do is watch maybe a 5 or a 15-minute candle first thing in the morning and watch for a 5 or 15-minute candle close over the level, right? Now you could take your entry, whether it be shares, options, your choice, all right? So now you're in the trade. Now what? Well, you want to manage it, right? So you're in, right? And now you're starting to make, a series of higher highs, higher lows. And then at the end of the day, if you close over the trigger, good to go. You're good to hold. But let's say you take the trigger, right? And it starts to move higher, and then it just starts to reverse. And now you close below the trigger. Well, no, we don't want to take that trade, right? So you're in the trade here. Now you're out of the trade here for what? A 1% loss, a 1.5% loss. This is what we say about cutting your losers early. That is a failed move, right? We want to see a breakout, maybe a back test and a bounce. So you could take the breakout, you could take the bounce, you could take the back test, or you could take the bounce. Those are the three ways I want you to enter the trade, right? I don't want you to, necessarily wait till the end of the day, because then maybe you're already up 3, 4, 5%, and now you're chasing, right? If let's say you enter at 4% at the end of the day, and then the next day it gaps down 2% or it gaps down 5%, right? You don't want that. So enter the trade on a lower time frame at the trigger, and if at the end of the day you close over the trigger, good to go. And if you close under the trigger, close out the trade. Very simple, all right? So next up is Oxy. I've been watching this one for a while. It's got long-term bullish divergence, and that means price is making lower lows, while the Williams percent R or your MACD or your RSI are making higher lows. So in this case, Williams percent R is making bullish divergence. We just crossed over on MACD. We don't have any squeezes, right? But we do have some above average candles, right? So volume is ticking up a little bit. And this is a Warren Buffett darling, right? He owns a good number of Oxy shares. Just something to keep in mind. This has been in a long downtrend, maybe not too long, right? Maybe 2.5 months. But I think for me, what I would do is set an alert on 60.64. Right, you could see we struggled there those 3 days. That day it acted as support on this pullback here. So just set an alert for 60.64 or accumulate between 58 and 60. Start accumulating shares here, right? Keep like a 1 or 2% stop loss, right? This is not a Tesla. This is not going to move 10% or 7 or 8% in a day. It's not. It will only on news, but normally, no, it's not going to move that. Its average true range is not that big. And so we want to take the trade over 60.64, and our first target is going to be this fib cluster at 63, then at 65, and then at 66.53. That's going to be your 618 retrace from that swing high to that swing low. All right? Next up is JBL. A couple of members pointed this one out yesterday, so I'm anchoring to the swing high anchored VWAP. You can see we gapped below it here, and then we came back above it, got resistance, then support, 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 and then we failed, right? And then we failed these 3 candles, and now we're right back there. Now, this does have earnings this week, so, not sure want to take a trade there, but we did have a TTM squeeze fire. MACD is already crossed over, and this has actually hidden bullish divergence. So yeah, something to watch and observe into earnings. All right, here's SMCI. We've been talking about this one for quite some time. I've said remain patient in wave 4. Wave 4 could be a long protracted triangle, and this is exactly what we're getting, right? Here's your ABC, that's your wave A. Here's your ABC, that's your wave B. Here's your wave ABC. Here's your wave C. Now the question is this a 1, 2, 3 setup, or is this an ABC wave D, and then we get one more ABC wave E, and then the next 5 wave comes. So again, just observing. We might get faked out. Where will we know? When we're over 949. That's when we know that wave 5 has started. So just patiently watching SMCI here. All right, next up is Mobileye. All the charts to date have been daily charts. This is a 65-minute chart. So 65-minute, we've got a falling wedge. You could see we had a break of the falling wedge into the close, and then it quickly reversed back to the downside. So for me, I'm looking at this as an accumulation zone. If you're looking at shares, anything between 27.42 and 28.19, I want to see a base being built here. I want to see support being held here. Could we fall down to 26.81? Yes. I don't want to see that though. And so what I would be looking to do is accumulate shares in this zone, or if you want to be a little bit more patient, wait for the break over 28.19. Right? Let's say we chop around for the next week or so, and then we get the break over 28.19. That's where I would take the trade up to 29.16, 29.73. That might be the level to watch for a bigger breakout back up to $32. All right, next up is Crocs. So I've been talking about this one for a while. Here's your cup. Here's your mini handle. Don't know why that's on there. Let's just ignore that. Here's your breakout, here's your back test, here's your bounce. Remember how we talked about sometimes if you miss the breakout, just watch for the back test. It's the same thing. You're going to get in at the same price. Sometimes you even get at a better price, right? Here's the undercut. So breakout, back test, bounce. Now we're coming into new 52-week highs. 164, 173 to the upside are my targets. Here's Disney. We've been very patient on Disney. Another falling wedge. Look at this TTM squeeze setting up. MACD's already crossed over. Look at this bullish divergence on W percent R. This is a William percent range. W percent R. What could we watch for? So I had originally put out an entry over 103.88 on 6.3. I think we could take an earlier entry now over 102.15. At the time, that's what the level looked like. But now with more time, it looks very much more like 102.15, right? Resistance, support, support, resistance. This is a support resistance flip zone. And then we can catch 3 points to the upside to 105. Then another 3 points to the upside to 108. Then another 3 points to the upside to 111. Another 3 points to the upside to 114. And 4 more points to the upside to 118. So that's the way I'm looking at Disney. So just got to be patient. Here's C Limited. This is a classic, consolidation, breakout. Consolidation, breakout. Consolidation, breakout. So now, do we come back up and now hit 81? Could that be our next consolidation zone, right? And then if we break out over that, do we go up to the May pivot high at $89 and consolidate and break out? I mean, we follow the trend until the bend at the end. It's a great rhyme because it makes a lot of sense. The trend till the end, till the bend at the end. Okay. All right, here is Square. This one, acting very funny, but also a falling wedge. Yeah, I mean, the only thing that I like about this is we're sitting on support, prior support, right? We had a hammer candle at the bottom of the wedge, hammer candle at support. Maybe this can trade back up to 66.87, but I would wait. I would wait for this to move over 66.87, and then you can catch 6 or 7 points up to 73.75. All right, here's Hasbro, ticker HAS. This is a symmetrical wedge breakout on, I think that was yesterday. And now we're back testing on, let me just double check that 1 second. Let's see. Yeah, so yesterday we had the breakout over the wedge, the breakout over the swing high anchored VWAP. And now this more holding over that VWAP. Could see an entry over 61.70 for a move up to 65.22. Yesterday we did have above average volume on the breakout. The squeeze has already fired, so it's negligent. And we have or negligible, I should say, not negligent, negligible. And we have a MACD crossover here. All right, next up is Airbnb. Been talking about this one for a while. Inverted head and shoulders. We had that fake breakout and then a push down, and now we're back at that level. I think 150 is going to be a level to watch. 154, 156, 161. We also have a beautiful slingshot squeeze setting up on Airbnb. And that's the last one for today. So we've got another 13 names. I know yesterday there was 14. There's some carryover from yesterday, but just trying to find the alpha in this market. It is a stock pickers market at the moment. So, semiconductors are leading the way. But we're potentially going to be starting to see some sector rotation, right? A healthy market rotates out of strength into weakness, and that new weakness or that old weakness becomes the new strength. It could be oil, right? It could be commodities. It could be metals. It could be, consumer staples. We just have to watch the rotation and see where money starts to rotate to. At some point, semiconductors will cool off and either consolidate or pull back. This trend will not last forever, and it needs to. It needs to pull back. If it wants to continue to move higher in the medium term, we need a shorter term pullback, right? So as one sector pulls back, another sector starts to move higher. All right, catch you guys in the market.